Hi students, do you know teachers love putting this exact trap question on the test to fail you? If a business repairs a delivery truck, is that a capital or a revenue expenditure? Most students guess wrong and lose easy marks. The answer depends on one simple rule. Let's break down capital versus revenue expenditures so you can ease this question in few seconds or few minutes. Okay. Now we see one by one that what are these capital and revenue expenditures and revenue receipts. First of all, the capital expenditure. Capital expenditure is money spent on purchasing, improving, or extending non-current assets. Non-current assets means these are the assets that the business have for more than 1 year. But what type of expenditures will become non-current assets? When we purchase them, their cost, any legal cost paid on them. Legal cost mean, for example, the registration of a vehicle, the taxation paid, import duties paid on purchasing a machine. These are all buying cost, purchasing cost. Okay. Then improving or extending. Improving mean that making it better than before, better than it the original one. For example, we have a vehicle of 2000 cc engine, and if we replace its engine with 3000 cc, means we are improving it. Okay. And similarly, extending means we are extending its capacity. For example, our building has 10 rooms and now we are making two more rooms, then we are extending our building. This expenditure will be called capital expenditure. These all types of expenditure will be capital expenditures. Now we move to revenue expenditures. Revenue expenditure is the money spent on day to day running a business. Means the routine expenses of a business are revenue expenditure. For example, we have bought a truck, okay, that became revenue capital expenditure. But now we need fuel to run the truck na. Okay. Whenever we fuel up our truck, this will become revenue expenditure. Whenever there will be repairing of that truck, it will be revenue expenditure. Okay. uh, Similarly, many other expenditures are revenue expenditure. For example, salaries of our staff, heat and light expenses, these are all revenue expenditures. And the other insurance expenses, these are revenue expenditures. Okay. Refreshments for the customers is revenue expenditure. Okay. Traveling expenses of our sales staff is revenue expenditure. And one clue of revenue expenditures is that all revenue expenditures are shown in income statement. Okay. Any expense that we show in income statement, these are all revenue expenditures too. Now we move to the capital receipts. Receipts. Capital receipts is, now we are on the receiving side. Money received from where? A source other than a normal trading activity. A source other than a normal trading activities. For example, we have a factory of making biscuits. Okay. Now if we sell the biscuits, it is our normal trading activity, but the money coming from selling biscuits is our normal trading activity. This is not capital receipt. Okay. For example, we have a space in our factory that we have rented out. We have free space in our factory that we have rented out for a warehouse to someone else, some other business. Now that rent receivable will become capital receipt. The rent coming from there will become capital receipt. Similarly, if we are taking a loan from bank, long-term loan from a bank to be used in our business, that is not a normal source of receivings. Okay, that is also a capital receipt. So now you have got, similarly, if we sell off a non-current asset, for example, we have a vehicle that we bought $50,000, and now we are selling it after using 5 years for $10,000. We are selling a non-current asset, and the money received from selling of non-current asset is also capital receipt, because normally we do not do that activity in our business. So any source other than a normal trading activity becomes capital receipt for the business. Now we move to the revenue receipt. Revenue receipt is the money received from a normal trading activities. Okay, any activity that is the normal trading activity, we receive money from there, is called normal trading activity. For example, whatever the business you have a restaurant. Okay, the money you are receiving from selling of your eatables is revenue receipt. Okay, you have a shop of spare parts. Okay, the money received from selling of those spare parts is revenue receipts, and so on. This is the money received from normal trading activities. Hope you have got the concept of capital and revenue expenditures and receipts. If this you like this video, please subscribe the channel and press the bell icon. Okay, students, now we have a question about revenue and capital expenditures and receipts from the past paper, where we have to indicate whether this is capital or revenue expenditure or receipt. Okay, let's see is from the start. Delivery charges for new office equipment. What is this? Delivery charges for new office equipment. Delivery charges of any up now office equipment is our non-current asset. We are buying the asset, and its delivery, we are paying its delivery charges. It will become the part of its cost, so it will be capital expenditure. Then roof of an existing repairs to the roof of an existing building. We have a building and we are doing its repair. So repairing a non-current asset is a frequent expense, and it can happen more than once in a year. So it is a revenue expenditure. Okay, it is revenue expenditure. Then uh, painting of a new extension to the factory. We have made a new extension in our factory, means we have made a new block or something that, and now we have to paint it. What we have done here, see, we have extended our non-current asset on, and on that extension now we are spending some money, so it will again be a capital expenditure. The last one, proceeds from a sale of motor vehicle. What we have done, we have sold we have sold a motor vehicle. Okay, we have sold a motor vehicle. Motor vehicle is our non-current asset. So proceeds mean the money we have received. We have received money from the sale of motor vehicle. So this is a capital receipt because it is not our normal trading activity. That's why it will be capital receipt. Thank you so much for watching the video. If you have liked the video, please tell us in comments, and please subscribe the channel so that you can get the coming videos and press the bell icon. Thank you so much.